Every week, someone gets this letter denied for a home that was never actually the problem. If you've been turned down for Barndominium financing, I want you to hear this clearly. It's almost never your credit. It's the property, the appraisal, or the paperwork, and all three are fixable. Today, we're covering all of it: the 5 real reasons lenders say no, what a Barndominium actually costs to build in 2026, what the loan itself costs on top of the build, and exactly how to walk in prepared instead of hoping for the best. If you're planning a Barndominium build and want more real cost, real engineering breakdowns like this one, subscribe now. We post a new one every week, and this video will make a lot more sense once you've seen how the numbers and the underwriting actually connect. Every mortgage, Barndominium or not, comes down to the same 3 things: your credit, the property, and the appraisal. Barndominiums usually pass the first one easily. It's the other 2 that trip people up. Freddie Mac actually names Barndominiums directly in its underwriting guidelines as an eligible non-traditional property type. It lists them by name alongside other unique housing styles, and requires comparable sales that demonstrate the property is marketable. Fannie Mae doesn't call out Barndominium specifically, but it does allow unique or non-traditional homes to qualify as long as the appraiser can establish a reliable, well-supported market value. Here's the part most buyers never see. An appraiser doesn't just estimate what a home is worth, they have to prove it, using recent sales of similar properties nearby. For a normal subdivision house, that's easy. There might be a dozen matching sales within a mile. For a Barndominium, there might be 1 or none within 30 miles. When the appraiser can't find enough comparable sales, they can't produce a supportable number, and without a supportable number, no lender, no matter how flexible the loan program is on paper, can approve the loan. Before we get into denials and fixes, it's worth knowing what number the appraiser and the lender are actually trying to support in the first place, because Barndominium cost gets thrown around loosely, and the range is genuinely wide. Most finished Barndominiums in 2026 run somewhere between $70 and $160 per square foot, depending on finish level, region, and whether you go with a kit-assisted build or a fully custom, contractor-managed one. A basic build with standard fixtures and simple finishes tends to land near the bottom of that range. A mid-range build, better insulation, upgraded materials, a finished look throughout, moves toward the middle. Premium, fully custom builds with high-end finishes and complex rooflines can push past $200 per square foot. Nationally, the average total project cost lands around $230,000, though your actual number depends heavily on size and location. A bare structural kit, just the steel shell, runs considerably less, typically $30 to $50 per square foot. But that price does not include a foundation, insulation, plumbing, electrical, drywall, flooring, cabinetry, or any of the interior finish work. This is the single biggest source of sticker shock for first-time buyers. A kit quote is not a finished home quote, and conflating the two is exactly the kind of vague estimate that makes an underwriter nervous later. On top of the structure itself, budget for site work. Land surveys typically run $100 to $3,000. Site clearing and grading can add another $1,200 to several $1,000s depending on the lot. A concrete slab foundation runs roughly $6 to $14 per square foot. And if you're extending utilities to a rural site, power, water, septic, that alone can add $20,000 to $60,000 before the structure ever goes up. None of this is the builder trying to nickel and dime you. It's simply what rural and custom actually cost. And it's exactly the kind of detail that belongs in the itemized budget we'll cover in Fix 5. Weak appraisal comps. Reason 1, and the biggest by far: weak appraisal comps. If the appraiser can't find enough similar recent sales nearby, they can't support a value, and the lender can't approve a loan against an unsupported number. This is the single most common denial reason on the list. In practice, an appraiser working a Barndominium file may have to expand their search radius well beyond what's normal, pull in older sales, or use traditional stick-built homes as comps and manually adjust for the differences. Every one of those workarounds takes extra time, extra justification, and gives an underwriter more reasons to hesitate. Lender overlays. Reason 2, lender overlays. A loan program like VA or conventional might technically allow Barndominiums, but many banks add their own internal rule blocking non-traditional construction entirely, even when the program itself says yes. This is arguably the most frustrating reason to get denied, because it has nothing to do with your file. You can have perfect credit, a supportable appraisal, and a registered builder, and still get a flat no simply because the loan officer's bank has decided, as a matter of internal policy, not to touch Barndominiums at all. Agricultural zoning versus residential. Reason 3, zoning and classification. If the county still lists the parcel as agricultural instead of residential, the loan can be dead before the appraiser even shows up. Residential mortgage programs are built around residential property. An AG classified parcel signals to the underwriting system that the primary use of the land might be farming or commercial, not a primary residence, and that a loan can trigger an automatic decline before anyone even looks at the house itself. Builder not registered. Reason 4, an unregistered or unfamiliar builder. VA loans and many construction to permanent programs require an approved builder, and an unknown name is an automatic red flag to the underwriting desk. This isn't about whether your builder is skilled. It's about whether they're on record with the program you're using, carry the right licensing and insurance, and have a track record the lender can verify. Shop bigger than the home. Reason 5, mixed-use ambiguity. If the shop or garage looks bigger than the living space, some lenders see a workshop with a bedroom attached, not a primary residence. Residential loan programs are built to finance homes, not commercial or agricultural structures with a small living quarter tacked on. When the proportions tip too far toward shop, the file starts to look like the wrong kind of property for the loan being requested. The fixes: the right lender first. Start with USDA, VA, or farm credit lenders and local banks instead of national chains. These lenders close Barndominium loans regularly and know how to work the appraisal. Before you ever fill out an application, ask directly, how many Barndominium or post-frame home loans have you closed in the past year? A lender who can answer that question with a real number is worth far more to you than one who simply says the program allows it. Residential zoning first. Get the property zoned and taxed as residential before you apply, not after. This single step eliminates reason 3 completely. Call your county assessor's office directly, confirm the current classification, and if it's still listed as agricultural, start the reclassification paperwork before you ever submit a loan application. This can take weeks, so build the timeline into your planning early. Bring your own comps. Build your own comp packet. Pull recent sales of Barndominiums or other unique homes in your area and hand it to the appraiser yourself instead of hoping they find it. You can't tell the appraiser what value to assign that would violate appraiser independence rules, but you can absolutely hand them a well-organized packet of recent sales, listing prices, and property details for them to consider. This is one of the most actionable things you can do, and it costs nothing but time. Verify builder registration. Confirm your builder is registered with the loan program you're using, and get that documentation ready before you apply. If you're pursuing a VA loan, this means confirming your builder holds a current VA builder ID. If you're going USDA, confirm they meet that program's contractor requirements. Ask for this documentation in writing before you sign a construction contract, not after. Itemized budget, not a guess. Come in with a real itemized cost breakdown, not a vague per square foot guess. Remember everything we just covered in the cost section: land, survey, site work, foundation, the structural shell, and interior finish are all separate line items with separate real numbers behind them. An underwriter who sees $230,000, itemized line by line, is far more confident than one who sees $150 a square foot, roughly. It tells them exactly what they're valuing, and it's the single biggest credibility boost you can bring to the table. If you haven't seen our full cost breakdown video, the link's right below. It pairs directly with this fix. There's one more piece buyers consistently under budget for: the cost of the loan itself, separate from the cost of the build. This is money you'll need at closing, on top of your down payment. Start with the appraisal. A standard home appraisal typically runs $350 to $550, but rural properties with limited comps, exactly the situation a Barndominium creates, often run higher, sometimes $500 to $1,000 or more because of the extra travel and extra research involved. FHA appraisals run roughly $400 to $700. VA appraisals run $425 to $900 in most areas, occasionally up to $1,500 in high-cost regions. Budget on the higher end of these ranges for a Barndominium, not the lower end. Then there's overall closing costs, which typically run 2 to 5% of the loan amount across any loan type, covering things like origination fees, title insurance, escrow, and recording fees. On a $230,000 loan, That's roughly $4,600 to $11,500. Government-backed programs each add their own fee on top of that. USDA loans carry a 1% upfront guarantee fee plus a 0.35% annual fee, which is usually rolled into the loan. VA loans carry a funding fee instead of monthly mortgage insurance for a first-time VA borrower putting zero down. That's 2.15% of the loan amount, dropping to 1.5% with 5% down and 1.25% with 10% down. Veterans with a service-connected disability rating are exempt entirely. FHA loans carry an upfront mortgage insurance premium plus a monthly premium that continues for the life of most loans. Conventional loans with less than 20% down carry private mortgage insurance instead, which also continues monthly until you build enough equity. How the loan programs compare. Here's how the main programs actually stack up for a Barndominium build in 2026, so you know where to start. USDA Rural Development sits at the top for rural income-qualifying buyers. Zero down payment, plus that 1% upfront and 0.35% annual guarantee fee we just covered. The property has to fall inside a USDA-eligible rural area, and you'll need to meet local income limits and typically a 640-plus credit score. The trade-off is availability. You're limited to eligible areas and income brackets, but for buyers who qualify, it's often the least expensive path to zero down. VA loans work the same way for eligible veterans and surviving spouses. Zero down, with that funding fee in place of monthly mortgage insurance. Plan on extra homework here, since many VA-approved lenders carry overlays that exclude Barndominiums even though the VA program itself allows them. A registered builder and clean residential classification matter even more with VA files. Conventional loans through Fannie Mae or Freddie Mac are the most flexible on property type, but the least forgiving on comps. Expect to put down 20% or more, and the appraisal has to independently support a reliable market value since Fannie Mae doesn't grant Barndominiums an automatic pass the way Freddie Mac does. FHA loans open the door with as little as 3.5% down, which helps buyers with a smaller down payment or a lighter credit file, but they run into the exact same comp support issue as conventional loans, plus that ongoing monthly mortgage insurance premium. Farm credit and local banks ask for the most cash up front, typically 20 to 30% down, but they underwrite relationship first, know the rural market, carry the fewest overlays against non-traditional construction, and are often the fastest yes for a custom build. The honest truth, Barndominiums are financeable. They're just not financed the same easy way a standard subdivision house is. Show up prepared with the right lender, the right zoning, your own comps, a registered builder, and a real itemized budget, and the odds shift heavily in your favor. If this saved you a headache, subscribe. In our next video we're pricing out another build, dollar by dollar.